What's up, everybody, and welcome back. We got another market recap, trade recap, whatever you want to call it. We caught some longs today, the day before, the evening before FOMC. Caught some longs, kind of like two winners. It was like one signal, but it was like two winners. We pretty much looked for a soup at the lows on in Q, and yes, kind of gave the better move, but I ended up taking in Q. Which is fine, but price was overall choppy. So if you do not catch a bottom or a top, could have been a little tricky to play. It is the day before FOMC, so whenever you have FOMC CPI the next day, you can expect some chop. That's why it's not the type of day that you want to set in into. But we pretty much were looking for we go on the larger time frame. We had this hourly fair value gap here after this breakout zone. So you can see this was a breakout zone from yesterday. It was a resistance point that we took short off of. It was a resistance, and then at 3 in the morning finally broke out, displacing to the upside, creating a fair value gap. So the price could potentially go back into the next day. As well, if we take from the top to the low, lined up with a nice little GP, right? And we have some bullish divergence on ES as well. If we go to the hourly on ES was a little bit the stronger one. Go to hourly, we have some bullish divergence. Look, this only came down to the 5 a.m. Did not come tap into this hourly fair value gap, right? So you're feeling bullish for the next foreseeable future, and now you look for an enter in a 5 minute and on the 1 minute. So we're jumping in Q. 5 minute, boom, boom. This is your inversion fair value gap right there, right? So you're looking for that to displace to the upside. Now I entered a little bit before this, before the closure above. If we go into 1 minute, why did that? On the 1 minute, we had a really nice, look at this, GP fair value gap combo, inverses this, and then the important about this inversion, it's important, and why this give me the confidence we're going to go to the upside, because not only this inverse, but also got retested and pushed up. Now, I had kind of a little bit of a shitty entry here, but I entered a little bit here. I was using this inversion as, this candle right here is my stop, and then we took off to the races. Close one here, which was that 5 minute fair value gap as well. And then close one here at the higher day, essentially, minus the wick. You got stopped out a little bit in the profit here, but then we added more. This candle and one, and then entered in this breakout for a quick move to the upside, and then closed it all pretty much at the new higher day, 840. Our target was 850 essentially today, which was almost near the top, and then a big sell-off. Again, I was not seeking a huge winner, 200 points, 300 points, because why? I understand my market conditions. That you have to understand the larger time frame market conditions, which is, hey, if I'm gonna have fundamentally a big news day tomorrow, I can expect to be some huge winners. I can expect a 600 point, right? I talked about this in the group. I said, hey, I'm expecting today. The executions make it look terrible. Executions off, get out of here. I'm not expecting the day to be like this, right? I'm not expecting this to be this day. To understand where price wants. So price is resting before the FOMC news. So we're going to get a day like this. We're going to get a day like this. We're going to get a day like this, right? Get probably some small moves in there, but it's not going to be home run day. You have to understand, every week you're only going to have about two really trending days. Right, that's why reversals tend to work pretty often, because more often than not, you're gonna get a reversal into a kind of like a doji candle or a small body candle versus a big continuation day, because price needs time to rest before that. Now, if you can understand when you have those big days and when you can capitalize on them, that's when you size in. If you can know that, hey, it's gonna be a big day, that's when you really want to put some size if you have an A+ setup, because those days can make you your whole month, right? If you catch one of those, can make you your whole month. So we went to the upside. We had this equal highs here, 19,125, as you guys can see here. And going to be a target, I think, tomorrow. Tomorrow going to be on FOMC, guys. And if you do want to trade live with me tomorrow, it's going to be for free, 2 p.m. EST. Just go to Twitch/BigGainsClub. If you know, I used to stream a lot, and I've stopped streaming, but I'm gonna get back to it. Don't worry, probably into the next year. So if you just wanna come hang out on my full Portland account, we talked about it in the last video. Come tune in tomorrow, 2 p.m. Eastern Standard Time, over on Twitch/BigGainsClub. And I think tomorrow, more than likely, either the news is gonna be bullish, we're gonna take this out and then go lower, or we're gonna go lower first and then take this out. I think that's gonna be the key area to watch tomorrow. Is wherever the first move is gonna be, the secondary move. Either the first move takes out these equal highs and then the second move will go lower, or the first move will be lower and then we'll look for some kind of buy models into those equal highs. Because at some point, dude, these equal highs need to get fucking taken out. These equal highs were built on, if you go even on the 4 hours, is the cleanest, but like, right? Been sitting there since mid-August, and now we're going to, so it's been there for about a month. And another note, YM in the meantime has been just not caring about, I always do this. YM is just not cared. YM is just like all-time high, all-time high, all-time high. YM is not cared. It's been extremely bullish versus everything else. So if there is a larger time frame like sell idea, YM should probably be the one that gives the biggest, best risk reward trade to the downside. Now, I personally don't trade YM, but if you do trade it, can be a solid option for you guys. I know a lot of you guys do love to trade US 30, especially if you come from forex. So back to NQ, the thing to learn today is staying patient and understanding. There's always learning, something to learn every single day, every single trade. And that's been like the theme of these like market recaps, is like what was like the key takeaway. Like yesterday, add into a winner. Today is staying patient, understand your overall market conditions. If it's not requiring it, it's not gonna be a huge win, it's not gonna be a huge win. Do not be greedy with your trades, right? You can trail your stop, like, hey, maybe today is gonna be fucking super bullish, we hit the equal highs. There's always a chance, right? Like, there's always a chance you're wrong. There's always a chance the market is going to do whatever the fuck it wants. Because at the end of the day, we're the little players just trying to follow along, trying to guess right, trying to be on the right side. Also, on NQ here, I do want to remove it and go to 1 minute. And on ES2, on NQ, I'm really in ES2. What a really nice idea of like, this is like a consolidation period. Manipulation to the downside into a bullish level. And then to a new higher there. An AMD setup. And when did the reversal come? Around 10 a.m. It's price. I was potentially looking for a long on the version for value gap, but price went down. And I was like, I'm happy it's going down right now. So we're approaching a 10 a.m. reversal time, which can be even better. When did we enter? Right at 10 a.m. Right? Made a higher low, gave us the entry model, and then off to the races we were. So I literally told her, I was like, I'm happy price is taking longer than this. It's longer it's taking, it's going better into, what did we learn yesterday? I took a loss because I traded outside my trading time, which was 9:50 or before. So, also understanding like what the day prior you did to learn better. And today was like, okay, I stayed patient till 10 a.m. or 9:50 and up and so on. And he gave the entry model. And understand like the day is so long. Like even now I'm recording this at 10 a.m. That means you have 12, 1, 2, 3, 4. You have 5 more hours. Like anything else. Like don't feel like 9:30, 9:40. I need to be in a trade. Boom. Like if there's no setup, the day's fucking long. So just take your time with that. Just understand like, hey, the day's long. I need to be in a trade. Like once you get rid of the thing that's like, I need to be in a trade, that's when you're really gonna start turning your trading around. Like, if you can go into the day and be like, I'm not looking for a trade. I'm happy taking 3 trades a week. I don't need to be trading like nonstop. Once you get rid of that, that's like when trading just gets better and you're kind of mastering your emotions. You're on the edge, like giving up on FOMO. You're on the edge of giving up on a lot of those bad habits that haunts a lot of beginner traders, right? And it's going to affect you to a little degree, but you just need to get better and better. If you took no trade today, I'm proud of you. Because at the end of the day, it was just overall choppy day, and unless you were really precise with your entries, you could have gotten a little bit clapped. So I hope you learned something. Subscribe down below. If you want to trade live with me every single day, use code 39 at checkout. 39. That's the number 39. And as always, peace out, boys. I'll see you tomorrow. FOMC. I'll see you there.